Here's a hypothetical tax tale. A single young guy who lives in, say, Brooklyn, New York, went online last year to book a trip to Mexico for a week. Then he thought to himself, if I rent my place out on Airbnb.com while I'm away, this trip will pretty much pay for itself. And so he did, registering on the site as a host. And before he knew it, some German traveler was at his door. As he showed him around and handed him the keys, he thought to himself, that's the easiest $1,500 I've ever made. The money arrived in his bank account as he arrived at the beach. Now, here's the question. Can he spend it all, or should he set some of it aside on the assumption he may eventually have to pay income tax on it? For many, it's a rude awakening when early in the new year, Airbnb and other home rental platforms send users a 1099 tax form. It means that income is being reported to the IRS. But some individuals, like our character from Brooklyn, may actually be exempt from paying taxes on that money. How's that possible? It's thanks to a tax break often called the Masters Exemption, because of its popularity among people who rent their homes during the annual golf tournament. U.S. taxpayers who rent their home, apartment, or even just a room in their home for no more than 14 days per year can pocket the income tax-free. But if you go even one day beyond those 14, then Uncle Sam will take his usual cut. How do you take advantage of the Masters Exemption? That's where things can get complicated. Some services, like Home Away, don't send 1099s because the company acts only as a broker and doesn't collect or send money to taxpayers. When that's the case, say experts, those who qualify for the exemption should simply not report that income to the IRS. But our Brooklynite character finds himself in a trickier situation. Since he received a 1099 from Airbnb, the IRS will learn of how much he earned. But the agency won't know that the income should be tax-free because he rented for fewer than 15 days. The IRS hasn't said how taxpayers should deal with this issue, and tax experts agree there's no easy solution. Here are the options. When you file your taxes, don't report this income, but prepare records in case the IRS sends you a letter. You'll want to have a copy of the rental agreement along with dates and the amount of rent charged. Another option, claim the hosting revenue on your annual tax filing as other income on a 1040 form. Then add an entry reducing it to zero and attach an explanation to the return. Some, but not all, electronic filing programs enable attachments. Whatever our Brooklyn host decides to do, he better be sure he hasn't rented for more than 14 days last year, because if he did, the master's benefit vanishes and his tax issues would become much more complex. That's the short answer.